Okay. Evening to you guys. So here is my position for some of the pairs and buyers for the new week, which is from starting from tomorrow, Sunday, 29th to Friday, 4th of October. Okay, so starting with the Euro USD. This is Euro USD. I have a strong bearish candlestick here. I always work with the weekly, daily, and 4-hour time frame. Those are the time frames I work with. Okay, and sometimes I switch to weekly, to daily, 4-hour, and 1 hour. But I always define my trend using the weekly and daily time frame to determine the longer time trend and the medium time trend. Okay, so what I do is the first thing I do. Okay, this is last week candlestick. Okay, this is last week candlestick. So right now I'm working with this candle. I'm working with this candle. So what do I do here? First thing I'll do is to get the pivot analysis, the pivot point. So what do I do? How do you get the pivot points of this candlestick? You add the high-low close. You can see it. The high-low close of this candlestick, you add the prices together and divide by 3. So the high-low close here is, the high is 1.1025 plus 1.0904 plus 1.0941 divide 3. Okay, I have 1.0956. That's the pivot here. Okay, this is the weekly pivot. Okay, so I move down to daily time frame. Okay, you can see the weekly pivots. Now, if you look at this formation here, what we have here, you can see that the market already tested the weekly pivots, the new week pivot that we are entering into now, right? You see now the market has already tested it and it's trading below it right now, but it has tested it. You see it now. So you can see the high of this candlestick is where we have the pivot point for the week. So now the candlestick, now which of the candlestick do you use here on a daily to get your pivots? I told you guys all you need to look for here on the daily chart is the candle where you have the weekly pivot price, the horizontal line that you plotted on weekly for the pivot point. You locate the candlestick, okay, and on the daily we have this candlestick. So what we would do here is to get the pivot of this candlestick, this bearish candlestick, okay, the pivot of this bearish candlestick. Okay, so let's get the pivot. The pivot here is 1.1023 plus 1.0937 plus 1.0942 divide 3. Copy. So that is for the daily. So we have this. You can see. You can see. I want you to observe something here. See where we have our daily pivots line, and see where this candlestick, the high of this candlestick, hits the pivot for the daily. You see it now? And this last candlestick hits the weekly pivot. So if I have to buy this pair now, I would wait for the market to trade above these prices to buy. Okay, I would wait for the market 4-hour candlestick. If 4-hour candlestick closes above this pivot line, then I would buy. See, I would buy. Okay, let me go down to 4 hour. So you can see what we have on 4 hour here. See how the price tested, the market tested this price, and also see how it played out here. You see it now? So we'll wait for 4 hour to trade above this candle for us to buy. Okay, to buy this pair, you have to wait for 4 hour to close above this candlestick. Okay, now if you look at your chart here, this place was a support. This place was a support. We had a support at this level. See, there was a support at this level. See now, there was a support at this level that became a resistance. You see, there was a support at this level that became a resistance due to the break of this, the low of this candlestick. You see, this candlestick broke this support level. You see now, so this place became a resistance level, and now this market is trading above this resistance level, this support level that has turned resistance. The market is now trading above it. You see now, so this resistance level now, support on resistance at this point now has become support. Okay, so I can even decide to risk this market when the market open. I can decide to risk this market and set my stop loss on few pips below this level, because this place has become a support, a support now. This place has become a support because this candlestick has broken this level. Okay, so it has become a support. So I can decide to take this trade, though normally I would have waited. Okay, I can decide to wait for the market to break this level, but I can also decide to take the risk. Okay, because of what I have here, this formation here, because of this formation, the broken support, which has become a support now, the resistance has become a support. So I can decide to take this trade when the market opens and set my stop loss. You can see I can set my stop loss 10 pips below this level. I don't have to wait for the market to trade above those pivot lines. Now, what I'm looking at here is the resistance and support. I'm not using the pivot points now. From resistance and support, from what I have here, this support now, this resistance level has become a support level. So what I will do is, while I'm waiting for the market to get to this level, I can decide to take this trade, okay, from this level, set my stop 10 pips below this level, okay, set it 10 pips below this level. Then my target, my first target would be, okay, since I'm expecting that the market will break this level, my first target will be some pips above this level. Definitely, if it will break this level, then it has to close above this level. Now, I might decide not to set my take profit. Okay, I might leave my take profit open, but I'll set my stop loss. So if the market goes against me, I will lose some pips here. And if the market gets to this point, okay, and trades above it, maybe I will get maybe like 30 pips. Okay, so this is supposed to be my entry, right? Using pivot points. So if the market now trade above this level, then definitely my stop loss, if I'm to wait for the market to trade above this level, my stop loss will be set somewhere at this level. You see it now? So this is 65 pips. But by entering at this point, I've reduced my risk. Now, it is likely the market will go against me, yes, but my risk is reduced here. While I'm waiting for the market to trade above this level, it's not trade above this level, my risk will still remain at that same level where I set it before. So my risk is reduced. Then my reward from this level now, I already made 30 pips at this point. Let's just assume the market closes above this level. Okay, I'd already made 30 pips from this, and so my risk is reduced. Then my profit is, I'll be able for something at this level. Okay, remember I've made 30 pips plus 50 pips, that's 80 pips. You see it now. Now I'm using two different approach here now. I used resistance and support level. Then at this level, this is what I'm supposed to use to enter the market, which is pivot level, waiting for the market to break this pivot level here. you can see this place was, we had a resistance here. This place was a resistance level. You can see, okay, I can also decide to enter the market when the market trade above this resistance level, and this resistance level becomes a support. So if the market breaks this resistance level, okay, it becomes a support. So I can set my stop loss, okay, some few pips below this resistance on support. I can set my stop loss few pips below. So this is the resistance, and you can see the weekly pivot, the previous resistance level, you can see, and the daily pivot. You can see how these three lines, okay, these 3 points, see how close they are. So this is the best position to look at, okay, considering this is a position you consider entering a buy trade. But like I said, from what I have here, using support and resistance, I can decide to enter the market, okay, at this point. When the market opens, okay, I can decide to enter when the market breaks this level here, because we had a little resistance at this point from the bears, a little resistance, not a strong one. So I can decide to wait. I wouldn't just enter the market when the market opens at this same level, that is the close price. I can wait for it to trade above this level before I'll place a buy, and wait for it to get to this level and continue with the trend. I hope you get that. I hope you get that. Now, if I'm to apply the zigzag indicators and all that, let's see what we have. If I'm to apply zigzag indicator, this my lines will disappear. Okay, no need. So that is that for. Okay, let me open a new chart so that I can apply the zigzag indicator there and see how I analyze the chart using zigzag indicator and stochastic max stock. Okay, you see this is zigzag indicator. Start with the weekly. You can see we have the zigzag indicator here. Now let's look at monthly. Okay, we still have the zigzag indicator at this level. Okay, and the zigzag indicator shows you, tells you if likely a possibility that the market will reverse. Okay, there's possibility when you have a zigzag below a candlestick like this, there's possibility that it will reverse. That is what I use the zigzag for. Okay, to know when the market is about to change its trend. Okay, so that is what I use the zigzag for. So we have zigzag on monthly, we have zigzag on weekly, and just as I did on the previous charts without indicator, what I did was to get the pivot. You can see we have this zigzag at this level. I got the pivot of this zigzag, then went down to daily. Okay, the zigzag, the pivot, the weekly pivot horizontal line was lying on this candlestick. I got the pivot, and we're expected to trade above. And you can see here also the market is trading below the stochastic 20 level. You can see it's trading below, which tells you the market is oversold. Now, because it's oversold here, that's below this level does not mean it will start buying immediately. Okay, that is why you need to use your pivot point to support this. Okay, that it's oversold does not mean to start buying. It will stay at this point for a long time, for weeks and months. Okay, so that it's at oversold level does not mean you just start buying. So you need to look at what is happening on the charts. That is where the pivot point analysis is very important. You need to know what is happening on the chart. You don't just follow the stochastic because stochastic is at this level. Okay, so you need to know what is happening on the charts, and that is where pivot point analysis comes into play. Okay, and you could also use resistance and support to define the trend. You can't use stochastic alone for trading. Okay, you have to use it with price action. Pivot analysis is price action. Okay, resistance and support is what? Price action. Okay, so you use that to also you complement it with the stochastic in the indicator. Okay, so that is how you integrate it. You integrate those systems together to get a good setup or a good analysis. Okay, so that is that for Euro USD. Let's move down to next is USD CHF. Let's look at the weekly. This is weekly. I'm not seeing I'm not having a clear formation here, but let me just explain some things here. Now, at this point, we had a resistance. There was a little resistance from the pairs here. Okay, there was a little resistance. We have it here. Then at this point also, we had resistance from the bears. This is a resistance. The price was dragged to this point. Also here we had a resistance at this level. Now the market is trading above this level. Am I supposed to buy? No, let me move down to daily. I think I will see it more clearly on the daily. So if you come to daily here, we have this is that was a Friday. This was the close of the candle for last Friday. You can see now we have a bearish candlestick, Okay, so let me go back to weekly, back to daily. I'm not seeing a clear formation here on it's not clear here on the weekly chart. So let me go down to daily and see what I have there. Daily, okay, I have a resistance at this level. Good. The market is trading. Let me look at 4-hour, weekly. I think I need to work with this with daily. Now the market is trading. Now this is what I want you to look at, this candlestick formation. Okay. Now this market traded below this candlestick, right? If we were to even get the pivot of this candlestick, if we were to get the pivot of this candlestick, you agree with me that this bearish candlestick is trading below the pivot of this candle, which signals a sell setup. We'll get the pivot of this candlestick. Let me do that on a daily. To get the pivot of that candlestick, 0.9948 plus 0.9906 plus 0.9937 divide 3. Do we have there? So that is the pivot for this candlestick. So the market is trading below the pivot of this candlestick, which is a bearish formation. So my bias for this pair is bearish formation. I would only buy this pair if the market trade above this resistance level. But right now the market is still bearish. It is still bearish as it is now. This bearish candlestick has covered this bullish candlestick. Okay, it has engulfed this bullish candlestick. So this is a bearish formation. If you work with the pivot, it is trading below the pivot of this bullish candlestick. Let me go back to weekly. Now if we are to get the pivot of this bullish candlestick, let's get the pivot on the weekly chart. Okay. This was for the previous week before just concluded week. Okay, so let's get our pivot of this candlestick. What we have is 0.9983 plus 0.9864 plus 0.9909 divide 3. So this is for the weekly. Okay, so we have the weekly from the week before. You can see the market is trading below the daily and the weekly pivot. The market is trading below it. You can see this is the weekly pivot we got, and this is the daily pivot that we got. You can see the weekly pivot is lying on this daily pivot. So this is pivot, and we already got the value for this pivot. You can see. So the market is trading below it now. So that is a sell setup. So let's go down to 4 hour. Okay, so I can decide to take a sell trade when the market open. I can decide to take a sell trade, but I still have a little support here. If the market opens, I can decide to take a sell trade, okay, or wait for the market to break this, to trade below this support level here, okay. I'll wait for the market to trade below the support level before I take a sell trade. Okay, so my target here, the market trades below this level, my first target will be this next, what's it called? Next support. This will be my next target. My first target will be the next support. And the next support is at this level. See? So I will set once, if the market breaks this level, then I will set my stop loss some pips above this support level, because this support has become a resistance. So all I need to do is just set my stop loss 10 pips above this support turn resistance. So if the market, let's assume the market closes at this level, and this level is 9 pips, so my stop loss will be around maybe, just 10 plus 9, that is on 20, let's say 20 pips. I set my stop loss at 20 pips, and if I'm risking 20 pips, I should expect nothing less than 30, 35 pips. So let's see the reward here. Okay, this is a good risk reward for 3 pips. That's my first target. That's my first target. And as the market keeps going in my direction, let's assume the market breaks this trades below this support level. See, this support level will become a resistance. So what do? I will adjust my stop loss 10 pips above this support level. If the market breaks this level, you see it now, I will adjust my stop loss 10 pips above this level. Then let me go to daily. Now this is my first target on 4 hour. Okay, my second target using daily will be somewhere at this level. Okay, that will be my second target. So if the market breaks this level, I will adjust my stop loss some pips above. My next take profit will be at this level. Let me go to 4 hour. Let me reduce. Okay, let me reduce the. Okay, so at this level, as you can see here, we have a support here. So at this level, then the next target, if the market breaks this level, the next target will be at this, somewhere around this level. This is a support level. So my first target, second target, and third target. That is my bias for this pair. So I expect a bearish move this new week. Now anything can happen in the market, but following my technical approach, technical analysis, this pair remains bearish. I expect a bearish move this new week. Okay, I expect a bearish move. Okay, so if the market changes direction, definitely you will see all that on the chart. Then you can decide on what to do. Okay, but with the technical tools here, the market is still bearish. So you can enter when the market breaks this support level here. You can enter, take a sell trade. The first target will be here. Set your stop loss some pips above this level. The first target will be here. When the market gets to this point, you can adjust your stop loss. Maybe you set it at this level. Okay, because we have a little resistance at this level. You see now, is a little resistance from the bears. So you can set your stop loss at this level. You can use this place as your stop loss. When the market breaks this level, this place becomes your stop loss while you target this next level. As it breaks this level, you adjust to break this level, you adjust to this level. So that is how you close profits in the market. Okay, always ensure that your risk is very, very low compared to your reward. Okay, so let's look at GBP USD starting from the weekly chart. GBP USD, you can see we have a strong bearish candle here. Now, before I decide on what to do, I want to know if I have a zigzag here on daily time frame. If I have a zigzag here, that indicates a reversal. So I won't sell. I'll be considering buying this pair. Okay, I will consider buying this pair because in the first place, if you look at this chart, we had the markets. Look at this chart. Okay, let me look at the monthly charts. You can see on the monthly charts, we have this formation here on the monthly charts. Okay, so if we were to use the monthly chart time frame now, if we were to use this, okay, we have this on the monthly, we'll get the pivots. Let me get the monthly pivots. We have 1.2705 plus 1.2118 plus 1.2161 divide 3. So let's see what we have for the monthly. You can see. So let's go back to weekly. You can see. So if I'm using the monthly time frame for my analysis, if I'm using the monthly time frame for my analysis, okay, you see now, it's this candlestick that broke this monthly pivots. And I would have used the weekly. This is the weekly. You see, I would have, okay, let's get the weekly pivot. See that the monthly pivot is lying on this bearish candlestick. So let's get the weekly pivots. Let's get that. So let's get the weekly pivot. This is 1.2383 plus 1.2079 plus 1.2159 divide 3. Copy. So let's see. It's for the weekly using monthly and weekly time frame. I want you to see something here. Very important to know what the players are doing in the market, and the big players in the market, they trade with longer, higher time frames like the weekly 12268. What I got? Copy. 2268. Okay, so you can see this is the weekly pivot. So if I were to were to be trading with the monthly and weekly time frame, you can see now at this point, this is the point the market traded above. The weekly candlestick traded above these levels. So I would have entered a buy here. You can see at this point, this is where the bullish move started using monthly and daily and weekly time frame. You can see. So we have retracement back to the weekly. You can see now where it's the market is tested, now it has tested the weekly pivot using the monthly and weekly analysis. You can see it has tested the weekly pivot. You can see. So what do I do here now? I would get the pivot of this strong bearish candlestick, the pivot of this strong bearish candlestick. Let's get the pivot of that. Okay, I'm working with the weekly charts now, weekly and daily. That's what I want to do. Now I need to go down to confirm. If I have a zigzag on the daily, then this confirms a bullish setup. There has to be a zigzag here on daily. Let me apply the zigzag here. Okay, just for further confirmation. If there's zigzag at this level on a daily, then it's a reversal setup. So let's go to daily and see. You can see I have the zigzag at this level. I have zigzag at this level, but let me get the pivot of this candlestick before I move down to the daily candle. So I get the pivot 1.2503 plus 1.2271 plus 1.2290 divide 3. Copy. And use a different column. So this is for this week candle. Let me move down to the daily. Daily, okay, so we have, this is the weekly candle, and this weekly candle is lying uh, on this candle. So let's get the pivot of this candlestick. 1.2497 plus 1.2347 plus 1.2349. So we have this for the daily. See now, so we expect the market to trade above. For us to buy here now, we expect the market to trade above this level. This is our weekly, and this is monthly, and this is the daily pivot. So we expect for us to buy this pair now, we expect the market to trade above this level. We expect the market to trade above this level, but I wouldn't wait for that to occur before I take my trade. Now I have my eye, the high of this candle. I'm looking at the high of this candle. Okay, I'm not gonna wait. Yes, if you want to wait, you can wait for the market to trade above this level, but I wouldn't wait. Okay, I always look for ways to reduce my risk. That's it. I always look for ways to reduce my risk. So this is the high. If the market closes above the high of this candlestick, if I have a bullish candlestick that closes above the high of this candlestick, it's a good buy for me. And I can also decide to work with the daily and 4-hour pivot. So let me look at the daily and 4-hour pivot. This is my bearish candlestick, 1.2336 plus 1.2271 plus 1.2290 divide 3. Okay, so let me see. I'm working with the daily and 4-hour now. We just have to be smart and get in earlier and catch the trend. Okay, get in early, it helps reduce your risk. Okay, your risk is reduced when you're able to. That's why it's important to know how to use multiple time frames so that it helps your risk is reduced. Okay, so that is that, and let me enter the value here. Okay, so that is for daily. I go down to 4-hour. This is 4-hour. 4-hour is lying on this bearish candlestick or this candlestick. I can decide to use this. I can decide to use this. If you get the pivot of this candle and the pivot of this candle, you will see they are almost at the same point. So you can decide to use this. You can decide to use it. I want to prove that to you. We will get the pivot of this candle. We will get the pivot of this candlestick. You will see that they are almost at the same points. Let's do that, and you will see. Okay, let me get the pivot here. 1.2336 plus 1.2271 plus 1.2284. This is 1.2297. Which color should I use here now? You can see that is the pivot using this candle. Let me just try and let's get this, and you would see it's almost at the same level. Let's just see. So I can decide to use any of those candle. 1.2312 plus 1.2287 plus 1.2290 divide 3. Copy. These lines are becoming just too much of the charts. It's okay. You see the value almost at the same level. Okay, but I prefer to use this one because I have my zigzag indicator at this level. Okay, I prefer to use this. Okay, so you can see they're almost at the same level. So what I'll wait for now is for the market to trade above these levels. I'll wait for the market to trade above this level, or Preferably, I wait. I think the best is to wait for the market to break this support. Yeah, this resistance level on 1 hour. So for me to enter this market, I would have to wait for the market to trade above that level. So if the market gets to this point, it's about 30 something pips. You can see that the market breaks this point. Instead of waiting for, if I should wait for the market to trade above this level, I'll be risking over close to 100 and something pips. So I would rather enter at this level, market trades above this level, and my first target would be this level that would have been my entry. You see now, I would have just set my take profit at this level, which is supposed to be my entry. So this would be my first target. So if the market now trade above this, then I can still adjust my take profit, okay, to some higher level, okay, and increase the profit. But I would enter at this early stage and take profit. My first TP will be at this level, which is supposed to have been my entry. Okay, so I'll wait for it to get here. From this point, I would have entered the market. So my bias for this pair, GBP USD, for this new week, coming week, is bullish. I expect a bullish move. Okay, I expect a bullish move on GU. That's my expectation for the coming week. Let me look at Aussie USD. Then I think I will end here. Then I'll look at Euro Aussie USD. Let me start with the weekly chart. This is the weekly. We have this on the weekly chart. Let me look at the daily. We have this on the daily. So let's start with the weekly. Let's get our pivots. Work with this bullish, strong bullish candle. Let's get the pivot of that candle. Strong bearish, strong bearish. And I want you to see something here. If you look at this level, the market changed its trend with this candlestick. That was where the market changed its trend. See, it closed above the highs of this candlestick. That is for candlestick formation. Okay, candlestick formation. But I'm not working with that. I'm just going to show you how to use your pivot analysis. So you can see at this point, this is where the market changed, the trend of the market changed, the bias changed from bearish to bullish. This candlestick engulfed this three candlestick. You can see it engulfed it. So that is a change in trend. You see now, this market, this candlestick alone engulfed this 1, 2, 3, 4 weeks candlestick. This candlestick what engulfed it. That's to say that the market has changed its trend. Okay, this you have here is just I see it as a retracement. It's just a retracement. Okay, the market will continue to follow this trend. To continue to follow this trend. Now, this space is a strong support. It's a strong support, so you can consider selling if the market breaks this level. But I doubt if the market will break this level. I doubt if the market will break this level. But if the market breaks this level, you can consider taking a sell when it trades below this level, and you just ensure when you are trading against the trend. I always advise that you use a very tight stop loss. Okay, and your risk reward should be maybe 1 to 1.5 maximum. And as the market keeps going in your direction, you keep adjusting your stop. That's the smartest way to do it. Okay, when you're trading against the trend here is bullish. But if you want to trade against the trend, like I said, I might consider selling this pair if the market breaks. This is a strong support. If the market breaks this strong support, this support becomes a resistant level. So if the candlestick closes below this level, I would set my stop loss some pips above this level. Very tight stop loss in case the market retraces. I'll set my stop loss some few pips above this level, and my risk reward will be maybe if I'm risking 20 pips or 30 pips, my profit target will be like 50 pips maximum. And as the market keeps going in my direction, I keep adjusting my stop loss. So let's get the pivot of this candlestick, right? Let's get the pivots now. You would see that this level here we have this highs here, you would see that the pivot of this candlestick will be close to these levels. So let's just see. Let's get the value. Now I'm not using this candlestick because when you see a candlestick like this, it tells you that there's indecision in the market. Okay, when you see a formation like this, this is referred to as a doji. It's a doji. Now it tells you, it shows you that neither the buyers or the sellers had the upper hand. Okay, there was a drag in, in the price. Yeah, the buyers dragged the price to this level, and the sellers also pushed the price down to this level. So we cannot say it's the buyers that had the upper hand or the sellers. So that's why I decide to use this, because this candlestick shows you, tells you that the sellers were in control, were in charge. Okay, this that's the week before the current week. Okay, you see, it's obvious that the sellers were in charge. Okay, so I would work with this and not this. This is indecision candle. It is referred to as doji. Okay, it is referred to as doji. Okay, so this is indecision in the market. So let's work with this. Okay, so let's get the pivot of that candlestick. Weekly, 0.6883 plus 0.6760 plus 0.6764 divided 3. So we have this. So that is for weekly. I don't want this video to be too long, so I'm going to end. And then the few pairs that are left, if you have any pair you want me to analyze it, just drop it on the WhatsApp group. I would analyze it maybe later on and drop it in the group. I don't want this video to be too long. It's long already. So this is the value. Let me change this. Okay, so you can see we have our weekly pivot. So let's move down to daily. We have a weekly pivot. You can see this market tested, this candlestick tested the weekly pivot and it retraced. So let's go back to, let's see daily. So we have the weekly here. So we are using this candlestick for our daily pivots. We are using this candle for our daily pivot because our weekly pivot line is lying on this candlestick. So let's get the value of this. So we have 0 point, no, 0.6780 plus, no, 0.6831 plus 0.6780 plus 0.6792 divided 3. So you have this as the daily pivot. You can see both the weekly and the daily close. So wait for the market to trade above this level. You can see we had a resistance also. We had a resistance at this level. So wait for the market to trade above this level. Okay, so from this point to this point is around of something pips. Okay, so you can decide to wait for the market to trade above this level. Okay, before you enter the market. Also, I want you to see that we had a support at this level. The support at this level. So if the market trade above the support also, this support becomes a resistance. Let's move down to 4 hour. You can see we have this formation of 4 hour, and on 4 hour we have a resistance at this level. So I'll wait for the market. If the market trade above this resistance level, I will take a buy. If the market closes above, this is a resistance level here. So if the market trades above this resistance level, I have a strong bullish candle above this level, I would enter the market. And like I said, the entry using pivot analysis would have been is this level. Okay, so I would have entered at this level using resistance and support. If the market breaks this resistance level, like I said, I always look for ways to reduce my risk. Okay, enter early and follow the trend and make cool pips. So I will reduce my risk here by entering at the close above this this resistance level. You see this level here is a support level. You can see we had a support level here. So if the market trades above this support level, it's a good buy, but I will just be patient for the market to also trade above this resistance level. So I'll wait for the market to trade above this resistance level for the trend to be confirmed. Okay, so I wouldn't just enter at the close above this level. I'll wait for the market to close above this support resistance level. Right? If the market trades above this resistance level, it becomes a support. So I can decide to set my stop loss. Let's say the market closes at this level. I can decide to set my stop loss some few pips below this level. Let's say 10 pips. So I'll be risking like 30 pips. So here was supposed to be my entry. So the market gets to this level, definitely I would reduce my stop. Okay, I'm risking just 30 pips, and just 30 pips here. Then the market gets to this point, this is just 24 pips. And when the market trades above this level, okay, then I'll set my TP profit. Now I'll leave my TP up open. What I'll set here is just my stop loss. My TP will be open. I'm waiting for the market to trade above this level. If the market now trade above this level, then I could target, this will be my first target because there's a resistance here. We also had a resistance here. This will be my first. So if I entered at this level and I'm risking 30 pips, my first TP, if the market closes above this level, my first TP, that's a good risk reward ratio. 30 pips to risk to target 73. I can go for this 89 pips. That's good risk reward ratio. Okay, always look for ways to enter the market at its early stage, 20 pips. Okay, so if the market even breaks this level, let's assume you decide not to enter at this level. If the market now trades above this level and you decide to take the trade from this level, let's say the market closes at this level, now your risk would have been 62 pips. See, 62 pips. But by entering at this level, you already reduce your risk. Or let's say you even set your stop loss some few pips below, because this place, when the market breaks this level becomes a support, right? It becomes a support, and you can see something. I want you to observe something here. Look at the weekly and the daily pivots. You can see we have a resistance level. You can see it's this place is a resistance level. You can see it. So if the market breaks this level now, this place becomes a support. So you can also decide to set your stop loss maybe some few pips below this level, 30 pips below, maybe 10 or 20 pips below this level, because this level automatically becomes a support when the market trades above it. And you can now target from this level now. If you enter from this level now, your target will be like, okay, this is 57 pips and you are risking like 30 pips. It's still a good risk reward ratio. It's still a good risk reward ratio. But for me that I've entered from this level and also looking at entering at this level, it is like 1 to 2, a better risk reward ratio. Okay, so that is that for Aussie USD. Now you need to understand the correlation between the pairs. The correlation between pairs, Aussie USD, GBP USD. I think they have positive correlation. It means that most times, if GBP USD is bullish, Aussie USD is bullish. So you can decide to just trade. Depends on how much you have in your account. Okay, depends on how much you have in your account, your capital. You can decide to just trade GBP USD instead of trading GBP USD and Aussie USD, because the fact remains that the probability that you will lose both if the market goes against you is high. If the market goes against you, the probability that you will lose both is high. So you can decide to just risk your margin on one of these pairs instead of taking both trade. Euro USD and USD CHF, most times they have negative correlation. So you cannot be buying Euro USD and at the same time be buying USD CHF. So if you have a buy setup on USD CHF, it is likely USD or Euro USD, it is likely USD CHF would sell. So it's better you can just risk your margin on Euro USD. You can just risk your margin on Euro USD instead of risking on both pairs, because if you lose Euro USD, the probability that you lose USD CHF is also high. If you buy Euro USD and you are selling USD CHF, if you lose Euro USD, you also lose USD CHF. So it's better you just risk your margin on one of the pair. Okay, GBP USD, Aussie USD, they have positive correlation. Euro USD and USD CHF have negative correlation. Okay, so let me look at Euro Aussie. One of you asked that I should analyze Euro OSI. Let me look at the monthly. Okay, this is the monthly chart. If you get the pivot, this candlestick is definitely trading below the pivot, and this looks like an this is an inverted hammer. This looks like an inverted hammer. Okay, that's candlestick formation. It looks like an inverted hammer, but I'm not working with that now. But when you see an inverted hammer like this on a strong bullish trend like this, you should know that the trend is about to change. Okay, so using the candlestick here now, I can say this is a bearish formation. Okay, using candlestick formation pattern, I can say this is a bearish formation. But let's go down to weekly. So this is weekly. We have this. This is our candle for last week. Okay, so we have a support at this level. Okay, so we expect the market to trade below this level before we take a sell trade. If we get the pivot of this strong bullish candlestick, the market is definitely trading below the pivot of this candle. So we're looking at the market trading to this level and breaking it. Okay, trade below this level. But let's just get the pivot on the weekly. Pivots on the weekly. Let me just do. Here's my calculator. Okay, let me get the pivots. So we have the high 1.6302 plus 1.6015 plus 1.62. Come on, 1.62. Is 1.6290. 1.62, 1.6290 divide 3. So we have 1.62. That's for weekly. I'm using the bullish candlestick. Okay. So that is that for. I need to be sure I have a zigzag here on the daily. Let me look at the daily. Okay, there's no zigzag there. Let me apply my zigzag. See what we have. So there's a zigzag at this level. Okay, so we have, this is our pivot for the weekly candle, which is a bullish candlestick, and you can see we have the zigzag here. So we are using this, we'll get the pivot of this bullish candlestick. The pivot of this bullish candlestick, let's get that. Let me get that. 1.6302 plus 1.6146 plus 1.6253. That's 6233. Okay. Okay, so the market is trading below the daily and the weekly pivots. So that's a sell setup for me. But before I enter a sell trade here, let me go down to lower time frame and see what I have here now. Before I would take a sell trade, I have a support at this level. The market has to trade below this level before I consider selling. Then I can set my stop loss. I'll wait for the candlestick that will close below this level, then set my stop loss some pips above. Okay, let's assume the candlestick that will close at this level. Okay, let's assume. So I can set my stop loss, maybe use the high of this candlestick or some few pips above the high of the candlestick that will close below, 10 pips above the high of the candlestick that will close below this support level. Okay, this support level becomes a resistant level. If it is broken, it becomes a resistant level. Okay, but I wouldn't just set my stop loss 10 pips above this level, but above the high of the candlestick that will close below this level, 10 pips above the high of the candlestick below, that will close below this support level. Okay, so my first target will be somewhere, I think I have a little resistance here from sellers. My first target will be at this level, and my second target will be at this level. Yeah, I have a support. So let's say the market close at this level, and let's say my risk is around 30 pips. Let me see the reward for the first target. This is like 1-to-1. So I will set my take profit either at this level or in between this level. I can't risk 30 pips and be expecting 30 pips. Okay, so expect the price to market to fall to somewhere here, so I can set my, to be on the safe side, I can set my take profits around this level. Let's say 30 to 70 pips. Okay, 30 to 70 pips. So that is that for the new week. Okay, so if there's any pair you want me to analyze, you can drop it in the group. Okay, I'll just use pictures to set it up. Okay, I'll just use my phone to do the analysis, and it won't be video. Okay, so thank you, and I believe the new week will be profitable. Okay, just be disciplined. Don't make decisions based on your emotions. Okay, always be logical. Every trade you're executing, you should always have a reason, okay, for executing the trade. Don't be moved by the noise. Okay, ensure you do your analysis. And it does, like I said, it doesn't have to be complicated. You see what I just did? It's just using pivot analysis, resistance, and support. This is what institutions use in trading. Hedge funds organization, this is what they use in trading. Okay, so you don't have to start plotting indicators, having so many indicators on your charts. Just keep it simple. Okay, keep it simple. So if you have any question, you can always drop it on the WhatsApp group. I'm always available to attend to your questions. Okay, so thank you. During the week, we'll still be, the conversation continues on the WhatsApp group. Okay, so during the week, if there's any change in trend, I will definitely let you guys know if there's any change in trend. The market is dynamic and anything is bound to happen. As a trader, you just have to also be objective. Okay, be objective. So if the market changes its direction, you know what to do. Okay, nothing should take you by surprise on the market. Anything can happen in the market, and you should be prepared for it. How do you get prepared for it? By entering your trades logically and also setting your stops in place. There should be a reason, like I said, a reason for every trade you execute in the market. You ensure that your risk is always minimized. Okay, your risk is always minimized. Okay, and that is how you win in this business. Thank you very much. See you in the next video.